Hey guys, good morning. This is Eric with Inspired Trading, or good afternoon or good evening, wherever you are in the world. All right, I'm on a US dollar, Japanese yen. I'm on a 15-minute chart. I saw a breakout, and when I want to show you guys this breakout, it's because this is what we need to be careful of on these breakouts. All right, clearly we had this nice little break. Let me go ahead and put a trend line or support line right here. All right, we have a support line. We got this nice bearish red candle that broke out. All right, so here's what we want to start doing as traders. We really want to start being patient. All right, we really don't want to start jumping on things just because they broke out. We got a clear breakout right here. All right, but then look what happened. Price found support here, and then now prices moved back up into some area of some form of structure or resistance. Here we're going to basically call this resistance. All right, so we got a break. Now we have a retest. All right, now we could possibly have entered in a short position here as well. All right, so I'm on a 15-minute chart, so I really want to see what this next candle that opens. So you see over here to the side, 4 minutes and 49 seconds. We got 4 minutes, 49 seconds until the next candle opens. So I want to be patient, really. I really want to see this because in the past, I was very impatient, thinking that, oh, I'm going to take this trade, and then now trade has come back either against me. All right. But yes, it would be going back in my favor if I did take this breakout. But we want confirmation, all right, that we have a trend continuation. Now, we got a little bit of that confirmation right now, but still, we want to see what this other candle is going to do and how it's going to react, all right, because it says nothing that this pair cannot come back up here in this region, all right. So I'm going to be looking, and what I may do is if we don't get a nice little strong action on the candle in 3 minutes, that's going to be open. I'm going to pause the video so you guys are not just sitting here waiting for candles to see what they do. But what I want to be mindful of, I want to be mindful of this particular area. I want to see if price, because this is considered an area of structure. All right. Remember, structure is going to be an area where you're going to have multiple candles, within a particular area. All right. So this could be considered a strong area of structure where price was at multiple times. All right. So remember, structure and support and resistance are not the same. All right. So you could think of support and resistance as holding up structure, but it's not structure itself. All right. So the support and resistance lines are just clearly that defined areas where price turned around at, and your structure is going to be an area where price has visited multiple times and hung out in that particular area. All right. So that's going to be the difference. Okay. So this now we got an indecision bar that's created. All right. Now it seems like the bears are trying to win, but we want to see whether or not price can come back up into this area. All right. So we got 2 minutes and 22 seconds. So let me go and look at some other pairs right quick. Let's look at the US dollar, Canadian dollar, and then we'll come back and check on those. All right. So we went parabolic on a 15. All right. So we have broken out of structure, all the structure down here. All right. So now we may have opportunity to look for, once again, pullback. We want to see some pullback. All right. We don't want to chase, because look what happened. If you jumped in and now all of a sudden it's coming back against you, be patient. All right. We want to look. We want to see this retest. All right. Look left. Where's this structure? All right. Price is starting to come back down in the structure. So we possibly could be looking for some opportunities to start adding to the position as it comes back down into the structure. All right. So we see price is coming back down. We have 1 minute and 16 seconds left before this candle is closed. Let's see what's happening. All right. We got to keep in mind this could be area structure as well too. All this can be area structure that where price could come back down and pull to. All right. We can also look and we can see whether or not what's the level of potential corrections for this. All right. So this is the 38% area, 50, 61%. So this could be also a great area that where price possibly could come back in to before rallying and going long. All right. But we do have uh, the necessary movement to know that we do have a good sign that we are headed to the upside. All right, we got 17 seconds that's on its way for the next candle to open. So we're just looking for potential target areas to the upside. All right. So, all right. So we could anticipate maybe price going back up to this area. All right. All right. New candle has formed. All right. Now you see, look at this. This is great. Look, so got this. All right, there we go. Look at that. All right, got this red candle. So look, let's look for opportunities. Let's see if it comes back down in this area. All right. So let's go back to what we were on, a U.S. dollar, Canadian. I'm sorry, the U.S. dollar, Japanese yen. All right, let's see what's going on. All right, here we go. So, all right, this one got a little bearish candle. So we need to still be patient and we need to wait. Okay. So I know it's difficult because look, this is a range. Here, 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 okay, possibly could have been here, but this is trading within a range. This is a lot of patience, all right? It's not really too much trades that you can really take. Now, there are trades you can take within a range. Like I told you, the bar elimination strategy is real good to take. As you look right here, you had a what? Red candle, and then you had a what? A green candle to engulf. Now, here's some rules that you need to stick to when it comes to the bar elimination. You need to make sure that when you look left, you have a clear identification of where the next stop sign. So let's think about traffic. Where's the stop sign? Or you can say speed bump. All right. This is the stop sign or speed bump. We look left, it's clear. If we clear this, we know that this is going to be our target. All right. If this is not defined, if it's too small, it's not worth the risk taking. Like this one right here, I don't think this will be really worth it, especially on a 15-minute chart. All right, we clearly get it, but if you look left, that's not a lot of probably pip value there, so I wouldn't really worry about taking a trade. See, that's only like 7 pips. That's not worth it. All right, so I wouldn't look to take the trade then. Okay, here is a good one that failed. All right, clearly we see we're getting the green, green, green. All right, we eliminated this red bar. We would have put our stop loss right here below. All right, and we would have looked left and we would have tried to trade it to here. All right, but here's some key things that you could look at to see is that when you look left, this really was traffic right here. Remember I talked about either the speed bump or stop sign. So you cleared it and then you look left and look what happened. You ran into this stop sign. All right. So you trading this, you would have to know that that is a lot of speed bumps and stop signs right here coming up. It's really no clear, true direction. So this probably would have been difficult to take. But let's say you did take it, you set your stop loss. You did go into profit, all right? And you could have moved your stop loss into profit, but eventually it came back down and failed, and it would have hit your stop loss, all right? So could have been a loss, but at the same time, we want to look for clearness, and this is really not clear. There's too many wicks coming down, and that's too many hurdles you're going to have to overcome, all right? You don't want too many of those. All right, so look, if you look right here, all right, you don't have a lot of wicks. You got like a full body. All right, so that gives you a clear, uh, more landing spot or clear path to the stop sign. All right. So always remember that when you're taking a trade, if you're doing a bar elimination entry strategy, you want to make sure that when you look left, there's a clear enough path. All right. So let's take this one right here. Let's say we had a green bar, the form right here. We do know that this is the next immediate area that will give us a problem. We got to clear that. So if we know we have it cleared, we know we can also stop there and use this as a form of a landing mark to take this trade. All right. Even though I wouldn't do this, but let's say you did, that's 4 pips. I don't know. Let's say you went massively heavy. I don't know, with a standard lot size, 10 pips. I mean, $10 a pip. I mean, that's $40. Maybe that's something you're satisfied with. You want to get out, but it's really not worth it. Right. Every time you take a trade, you want to make sure it's worth it. What are you risking to actually make the money that you have identified on the charts? All right. So, like I said, this could have been, you could have taken it, but looking left, look at that, that's just too many speed bumps. All right. We want to see more candles like that one. Let me get in here. Yeah. So you see how you get this nice solid candle. We want to see more of that. All right. Or more of these right here. Okay. When you get too many of these wicks, that's, and then these wicks also suggest what these are. These are the bears are coming back in and it's showing you that it wants to push price down. So we got all these clues of pushing price down. Even this right here is clues of pushing price down. However, remember I told you that wicks also leaves clues. Okay, what are the clues? The clues is that these wicks are also landing marks or tombstones or whatever you want to call them. They're showing us that price eventually wants to come back up here and cover these wicks. All right. So that's why I would be a little bit hesitant. You see how we got this bullishness coming back up? I Yes, we could have took this trade on the breakout, but at the same time, look what's happening. We don't want to get caught up in this. All right. Look what happened. Now someone is being played with who took this short. Now they're frustrated. They're like, "Hey, would you go on? I thought you was going strong. Now you turn around. Now you're playing with my feelings." All right. But we can be patient as traders and know that, hey, money is to be made, but we can be patient and wait for our particular setup. We want to set up. We want to wait for a true retest of the structure. All right. Not truly the retest of the support or resistance line. We want to see the retest up here in structure, and we'll see what happens. Okay. Now, for instance, if for all of a sudden that it decides that it does want to start to break, then possibly we can look for alternative. All right. But still, we still could wait for a retest as well on that and then take this particular trade. But we know that this right here is what we call an exhale. This is an exhale state, and now we're in an inhale. All right. So the market breathed out. Now it's inhaling again, and we want to see how much it inhales, and then it want to expand back out. All right. This is just purely consolidation. Okay. We're just in a consolidated state. All right. We don't have a defined area. See that strong candle going back up. All right. So let's go back to what was on US dollar, Canadian dollar. Let's look, see what's going on. All right, so price did shoot back up, came back into one of our areas of buying opportunities. Since I'm doing this video, I did not get to take that trade. I wish I could have. So what I may do is this is now a key area since I missed it, which is fine. This still is a key area that price needs to break. So we want to see how price reacts to this area. All right, if we do get a rejection, we can anticipate that price may come back down and to retest this particular area. This will be one of the best entry points right here, based on a 15 as well. What I could do is I can go ahead and do some market execution orders, so I'm not actually just sitting there waiting. So I can do some buy stops orders, come back down in here, it'll activate my order, and I set my targets up here. So I'm gonna bring this over. All right. So let me see how many pips that was since it came back. All right, that's good. That's 19 pips. It's pretty good. So that's a strong candle. All right. So let's see how it's back. This next candle opens in 5 minutes. See how that reacts. Let's go to the British pound, JPY. All right. And today, like I said, I'm doing most of these analysis on a 15-minute time frame. I like to enter on a 15-minute time frame. Normally, I do a analysis on the 4 hour, 1 hour, and then I look for my entries on a 15-minute. So I like entering on a 15-minute. You can enter on an hourly, or you can enter on a 4 hour. Depends on what you're trying to accomplish. Um, but I like the 15-minute. Gets to be the best of both worlds of not being too close to the noise, but just enough to get a sense of what things are happening. All right, so um, we have a clear area of where price found support. We did break it. We're back above it. And of course, we have our resistance points right here. All right. So we had a nice, so this is a false breakout. We had a bullish move to break this. This was like a bullish flag. We had a break to the upside, and then we had a fail, and we were back down. All right. So what we're looking for now is clear. What is that way? Here we go. All right, we'll see how price want to react covering this particular candle. If we do get a break of this, we may want to wait for a retest, and then we want to have our ultimate target down to here. This is what we want to see. We want to see how price reacts, retest this particular area, see if it holds. If it holds, and we get our trend reversal candles, then we want to be able to see if we can take this trade down to the downside. Before getting to the downside, we have to cross. We have to make sure that we get over this, and of course that one. When you look at on these charts, sometimes there's just not a clear path. You got a lot of things you have to overcome. This is why you see all these dips in the market. Okay, I'll give you an example. Look at this. That price to come down, stop, back up, come down, stop. All right, look where it stopped at. Look left. Look at this. This is all within the zone. We're on the 15-minute. I'm pretty sure if we go way over here, we may. I don't see anything now because on the 15, but maybe on a higher time frame, possibly could have seen something else over there as well too. Let's go on the higher and see what we see. Let's go 4 minute. I mean the 4 hour. Boom. See. All right. See where my arrow is? You can't see it now. Let's go. All right. Price stopped where I got my arrow at, but if you look, structure. So it was on the 15, you couldn't see it was too far over, but now we're on a higher time frame. You're seeing prices respecting levels on that's left. All right. So we got this nice little bearish move on the 4 hour candle. So it's giving us that we possibly are getting ready to head to the downside. And you notice I'm saying stuff like possibly. The reason why is because everything in trading, it's a possibility. It's not a guaranteed fact. And we want to stay in that type of bias mindset is because if we thinking that something is automatic and guaranteed, that's going to be a disaster for us later on because then we'll start taking uncharacteristic trades, going too heavy because we think it's guaranteed. Well, that's not true. All right. So we did get a nice break. We're on the 4 hour. I like this. This Bearish candle, eliminate is green, eliminate, eliminate it, eliminate. All right. We're looking left. We clearly see that this, we would, if we were paying attention earlier and we had this trade, we would what? We're enter here. We're going to put our stop loss above the candle. That was eliminated. All right. Stop loss above here. We're in this trade. We're probably looking to possibly take profit somewhere in this area. Why? Because this is the next speed stop sign. All right. Look at that stop sign. All right. This is structure too. Why? Because we have multiple candles that hung out in this particular area. All right. So we're right now, we're taking profits on this. How many pips is this? 40 pips. We're good. We're satisfied. Now, when we enter and we get out, we want to see how price reacts to this area. It's because now we want other opportunities to enter back in. All right. So we see we get a little form of rejection on the 4-hour chart. Now we want to see how we got 2 hours before the next candle opens. So of course we're not gonna be on this video that long doing it, but we want to see how price is going to react when its next candles are forming. All right. And then when we get a push to the downside, this is going to be the next target. All right. We want to see this target right here get hit. We want to trade to this target. Boom. All right. What is this target at? Nice area of what? Structure. Remember? Boom. All right. This is the area one we want to go to. So maybe we can get a retest, come back down. This is 70-something 6 pips. We like that particular trade. All right. So that's what we're gonna wait for. All right. So guys, this is a game of patience. Almost just like let's see what the price does, and then it comes back to a zone that we are comfortable with, that we feel that it'd be safe for us. Then that's what we will focus on. All right. So I told you we like to do our analysis on a higher time frame. So we're on a 4-hour chart. See, 4-hour. Every candle is 4-hour. You see a clear level of different structure. All right. So let me go ahead and smooth these. All right. So look at our bar elimination. Red, green. This red was eliminated right here. Great entry point. Now, this is the 4-hour. We could have what? We could go down to a lower. That look, I'm just showing you, if you want to trade it on the 4-hour and enter on the 4-hour, this is what you could have done. But it's going down to the 15-minute, and now on the 15-minute, we're able to see something totally different. All right. Now we're able to see where price actually, and this is going to be a realistic trade. All right. This red bar, then we had a green bar to eliminate. So we would have entered here, but where prices currently is, you would have never probably traded it there. Why? Because we want to look for traffic left. We entered here. We're going to have our stop loss above or below here. All right. Where's our target? It's going to be here. That is the next level of, right here. If he was taking this trade. All right. That's probably not a lot of pips. So let's see. Yeah, that's not. It's only 10 pips, so we wouldn't have taken that trade. All right. This really is not a good area to trade. This is too much. There's too much going on. So we wouldn't want to do this. All right. We need a little bit more clarity. Now, this is a great teaching opportunity. When you see all this, you're like, listen, the bar elimination may not be good for this because it's too much choppiness. Now you may say, let me go to the hourly and let me see if we can see some better structure. Now we may see a little bit of better structure, and we can see what we have on the plate. And right now we have a red bar screen. It broke. So you could have taken this trade right here. It would have went against you, but your stop loss, let's see. Well, once again, never mind. Remember the rules. Look, that's too much. So to be honest, guys, this no bar elimination, nothing would have been traded in this because this is just too much. Too many wicks, too many wicks, too many wicks. However, what we can see is something that we had spoke about before, that these wicks leave clues. All right. These wicks are showing that we have the bears are coming in and giving pressure and pushing this price down. However, this is landmarks. I said tombstones or whatever you want to call it. This means that, hey, price want to come back and cover these, and then look what happened. Boom. It covered. All right. So what I mean by cover the wick, look at this. So this wick is here, and if this wasn't over here, nothing has covered it. But all of a sudden, you have a strong bullish candle, and it covered the wick. All right. So candles, wicks leave clues. Look at this wick. All right. And then we have all this down here, but somebody could have put a note right here that said price will return. Like I said, price will return, and it returned. It covered the wick. All right. So this is the ultimate target up in this area too. See, structure, structure, structure. Really want to get up in here. All right. This is where we want price to come back into this area. All right. And I hate I missed this trade. I had it drawn up that this is where it's going to go, and I think I had gotten out of the trade, and I'm trying to see. I think my entry point was somewhere up in here. All right, so that went up 64 pips. It's not bad. But like I said, let's be patient. Let's don't chase. Let's see if we can get a nice little pullback, and then we can go up and hit our targets. If we miss it, and we miss it, it is what it is. Let's look at Australia, JPY. All right, well, we're on a 1 hour chart. All right, so we'll get a nice bearish move to the downside. The yen seems like it's picking up some strength, guys. So be mindful of that. Remember, the yen flourishes during crisis. So with the coronavirus cases picking up, we could see more strength for the Japanese yen. All right, we're getting a nice rejection. Why? Because we ran into what? Market structure. So price can react to market structure, or it can react to just pure support and resistance. But in this case, it came down to structure area, and now it's coming out. So this also could be an opportunity to wait for price to come back up and test this area. All right, before long, we want to see how it tests this area. Okay, we want to retest the area that was recently broken as support. That becomes the new resistance. So we want to be patient, and we want to see how price reacts to this area and then come back. If it doesn't come back, we don't worry about it. All right, we want to wait for retest. Okay. All right. So let's do this. Let's see something. Let me see. Mm, 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 mm. All right. Here we go. So let's go to GB, British pound, US dollar. See what's going on over there. Right. Okay. All right. Boom. Here we go. Impulse. We like this. Impulse tells us what? That price is giving us a direction. Like for instance, look at this. It's an impulse to the upside, and then we had a what? A retest into what? Structure. Or area that was what? Once resistance. This was once resistance. Price came up, retested here. This is your buying opportunity. All right. Sometimes we call this the three-wave pullback. Okay. So it would have looked like this with three-wave pullback. And we really don't call it this no more. You still can, because sometimes people's getting the wave count mixed up. And it's not Elliott wave, so it's just simple of 1, 2, 3, pullback. Boom. All right. So that's one of the ways you can help identify. But yep, so you see it came back. So this is the area where you could have had your resistance, but this was an area too. So this is a major area. So this is the difference. So you have an area price turned around and went to the downside, came back up, and then we retested it and we broke through. All right, we came back to retest, went, and then we corrected again. And now this time we came deeper. We came deeper into what? Structure. All right. This is where the patience start to pay off when you're waiting for price to come back down to the structure area. All right. We also can look and see how much of the retracement that was. Based off that, all right, boom, 61%. So that's another way to help you guys. You're like, well, how much do we know it's going to pull back? Like, well, we don't know, but we can think that if it does pull back 61%, and 61% is also in an area where there's a lot of confluence or structure, then that's a high probability that it could um, come back to the area. Even if we took from here on up, boom, all right, we got the 23% area and we have the 38% area, and then we'll look where price is. Price is right here at the 38. Look where all these candles is. That's structure. Price actually came to structure. Now we got what? 61%. Look at all these candles that's hovering right around the 61 and the 78%. So we can anticipate that price is going to eventually come back down into this area. All right. And then we can go ahead and have some target boxes here in this area that we feel that price is going to come back down. And then now all of a sudden we have to what? Find some good entry points to come back down. They come down for about 74 pips for our targets. All right. So now we want, like I said, we want to wait for. We got 2 minutes. We want to see how this next hourly candle formulates. Whether we're gonna get some bullish candles coming back up. For remember, we got the exhale, and then we're gonna have an inhale state, and then we're gonna have an exhale. All right, and then we may have a consolidation state. All right, all this was a consolidation after what? We had a what? We had an exhale. This is an exhale, inhale, exhale, inhale. Now you consider this, if you want, you call it holding your breath. So we're in the holding in the breath stage. All right. Matter of fact, let's go ahead and just go with that. That may help you. All right. Consolidation is like holding your breath. You're holding your breath because you're going to explode once you let it out, and then you, whew, boom, out. All right. Inhale, boom, out. Okay. So always remember, in the holding in the breath stage, you're holding your breath to be able to explode it in either direction, either up or down. All right. Let's look at last one. You can do Let's do the CAD JPY. All right, look at that. That's a nice little drop. All right, so it's giving us clear direction that we want to go to the downside. All right, so we want all right, here we go. So based on that move, all right, this move down, the retracement level is 61%. It's right here. See a lot of market structure there. Let's stretch it out so we can see it more. Let's do this. All right, let's get another one. All right, see 61 right here. Market structure right here. Let's see if price can come back to this area here. And then from here, we're going to look for some selling opportunities to get back in and go short to take it down. All right. We also can look for opportunities to actually trade it if we get a couple bar elimination. And this is what we want to see. This, matter of fact, this is a perfect one. All right, that we want to see. We want to see if we can get a green bar to eliminate one of these red bars in this state. If we do, going back up here is wonderful. Why? There's clean traffic. This is really what we want to see right here. We love to see this. We want to see price eventually work its way back up in here. And then if this bar is eliminated, then we just put our stop loss below here and we'll take the trade. I like this if we can do it. So I'm going to keep my eye on this CJ. It's only 27 pips, but we can make up for it if we were a little heavier. So this is a play that I'm going to look at. All right. I can already go ahead and put a trend line here. And if price breaks above that on the next candle, we'll look for opportunities to trade it. You could go down to the lower time frame and look to the 15-minute, and you may can find some opportunities. Okay, so this is what that. Okay, so this is what it look like. All right, now still we'll have to face this if we're going back up. Look at this wick. See, it came down, boom, and then what happened? Candles covered it. All right. So you see this wick up here? That means that possibly we're going to have a candle eventually come back up here and fill that. All right. So guys, that does it. I think we went over CJ, Euro, USD. I think we did Australia, Japanese yen, US dollar, Japanese yen, uh, British pound, Japanese yen, and I think I did the British pound, US dollar. All right. So make sure y'all leave comments. Got any questions? Also, my email address is attached. Some people have emailed me as well. Make sure y'all hit the subscribe button, hit the like button, and y'all have a great one. All right.